Hello, Parallax traders. Today we wanted to take a small step back and give you a quick overview of some trading basics, the differences between technical and fundamental analysis. So many of you watching this video are likely new to trading, and although the exciting part is of course actually getting on the charts and putting those trades on, it is absolutely necessary that you decide what style of analysis you prefer first, so that you can go and develop a trading plan and practice that style as much as possible. The more work you put in up front, the better your trading will be in the long run, and we can promise you that. So there are two main camps when it comes to analyzing any market: fundamental analysis and technical analysis. So let's go over the main differences between those two now. Fundamental analysis looks at economic and financial factors that might influence an asset. For example, this could be an interest rate announcement if you're trading Forex, an earnings report if you're trading in the stock market, or maybe a big change in some blockchain data if you're trading crypto. We mostly focus on Forex markets here at Parallax. So for FX, fundamental analysis seeks to break down the impact of any political, economic, or social factors that might have an influence on the value of a particular currency. And through identifying these drivers of a currency's value compared to the other currencies, fundamental analysts are then able to get enough information to make their trading decisions. So one very relevant example right now would be inflation, all over the news. So differences in various inflation rates across the world is one example of something that would have a very important impact on the future movement of certain currencies. So if you wanted to be a fundamental analyst, you wouldn't pay a lot of attention to the prices bouncing around on a price chart. Instead, you'd be focusing more on economics and politics and any big decisions made by policymakers or global central banks. Now, technical analysis, on the other hand, is all about the chart. A technical analyst looks at the past price action of an asset and uses that data to attempt to forecast future price moves. It is the study of historical price action in order to identify certain patterns, and those patterns help determine probabilities of future moves in the market, whether an asset or a currency is likely to go up or down. So we can do that through the use of technical studies, technical indicators on our charts, and a variety of other analytical tools. But really, technical analysis boils down to two main things: identifying the trend and identifying key support and resistance levels on the chart. So you may develop a strategy using, let's say, support and resistance, and maybe you want to add in some common momentum indicators like the RSI or the MACD. And eventually you will develop a trading plan around the various breaks of those important levels and also the signals that the indicators you choose might give to you. So if you wanted to be a technical analyst, you wouldn't pay too much attention to the news. You would be much more interested in chart patterns and other indicators and using those things to determine what the past price action can tell you about future price action. But at the end of the day, it doesn't really matter which style you choose. What's most important is that you discover which works best for you and pick one. Again, this is important to learn early on in your trading career. That way you can focus all of your time and effort into mastering one style of analysis. And that's what we've done here at Parallax. We prefer technical analysis and have dedicated many years to mastering that craft. We are big fans of what is known as the Elliott wave principle. It's a very robust and effective form of technical analysis. Now, I won't go into the details of the wave principle here. It's quite a dense topic. But we already have plenty of awesome videos on our YouTube channel that cover Elliott waves. The Parallax team, including myself, we've tried all different types of market analysis, and we believe beyond any doubt that the wave principle is the most effective at forecasting the markets and, most importantly, learning how to profit from them. So I hope that gives you just a little bit of information and background on the two main types of market analysis. If you'd like to learn more about our style of technical analysis using Elliott wave theory, then please join our Discord group. The link will be in the description below. We have an awesome community that discusses markets and trade ideas and a ton of other great stuff. It is free to join, so we do hope to see you in there soon. Thank you, everyone. Happy trading.